Hello everyone, welcome back to this week's Technical Insights. Global equity markets had a mixed performance in the second week of October. The US markets powered forward with the Dow Jones Index and the S&P 500 reaching new all-time high. But that can't be said for the Asian markets as Chinese and Hong Kong markets ended in the red. The US market kicked off the third quarter earnings season last Friday, with JP Morgan's and Wells Fargo's reporting their third quarter results. It is a promising start to the earnings seasons as both US banking giants reported pretty strong results. JP Morgan rose 4.4% after topping profits and revenue expectations, while Wells Fargo's popped 5.6% on stronger than expected profits. The results lifted the US markets on Friday, with the Dow Jones Index jumping 409 points or 0.97% to close at 42,863 points. Broad index S&P 500 gained 35 points or 0.61% to 5,815 points, closing for the first time above the 5,800 level. Tech-heavy Nasdaq Composite Index also climbed 60 points or 0.33% to 18,342 points and is now less than 2% away from its all-time high. For the trading week, the Dow Jones Index added 511 points or 1.21%. The S&P 500 gained 63 points or 1.11%, and the Nasdaq Composite Index added 205 points or 1.13% to finish the period on a high. All three major US indices clocked their fifth straight consecutive winning week as investors tend to view the banking sector as a barometer for the health of the US economy, setting the tone for the remainder of the earnings seasons. US stocks also benefited from macro data that elevated fears that inflation was not cooling off quickly enough. This included a lower than expected September PPI reading after the CPI increased slightly more than expected. But this data will become less impactful as inflation moderates and the Fed could still be on track for a 25 basis point cut at the next two FOMC meeting. In Asia, Hong Kong stock markets were closed on Friday for the Chongyang Festival. Last Thursday, the Hang Seng Index jumped 614 points or 2.98% to 21,251 points, snapping a two-day 11% decline. The Hang Seng Tech Index also gained 95 points or 2.05% to 4,736 points after falling more than 13% during the middle of the week. For the shortened trading week, the Hang Seng Benchmark Index tumbled 1,484 points or 6.53%, while the Hong Kong Hang Seng Index nosedived 491 points or 9.39%. On Saturday, China's highly anticipated finance ministry briefing lacked the firepower that equity investors had hoped for, indicating that the volatility that gripped the Chinese market will likely be extended. While China finance minister promised more support for the struggling property sector and even hinted at greater government borrowing to shore up the economy, the briefing did not produce a headline dollar figure for fresh fiscal stimulus that the market had sought. A lack of new incentive to boost consumption has been the weakest link in the Chinese economy and will be another reason why traders may feel disappointed again. Back in Singapore, our STI index closed lower on Friday. Our benchmark index is down about 11 points or 0.32% to 3,573 points. For the week, our STI index lost 15 points or 0.43%. Year to date, the STI is still up about 10%. And it's just about 80 points or 2% from its year-to-date high at 3,652 points. One of the biggest movers that caught my eye on the Singapore market on Friday was the movement of SATS, the in-flight caterer, whose share price dropped by 16 cents or 4.22% to close at $3.63. There were no news or announcements made by the company last few days, and their share price hit a 52-week high on the previous Friday at $3.84. Last week, the share price tested the 52-week level high a few times but was unable to break through. So we saw quite a bit of a profit taking on Friday ending the week. So for this week's technical analysis, let's look at in-flight caterer SATS. Singapore Airport Terminal Services, or what we commonly call SATS, share price has fallen 16 cents on Friday or 4.22% to close at $3.63. For the week, the share price dropped 20 cents or 5.22%, erasing much of last week's gain of 6.69%. We previously covered SATS on the 26th of August, somewhere over here. Restating what we saw in that video, our views from the previous video was that we believe SATS share price is likely to continue its uptrend, and investors looking at SATS can consider the then 20 days moving average or the 50 days moving average in blue at $3.20 or $3.10 to accumulate further towards its previous year-to-date high of $3.60. Even though SATS share price hit the target of $3.60, we did not manage to see the SATS share price retrace back to the $3.10 or $3.20 level, which is our preferred entry level. Fast forward to today, SATS share price has hit a new year-to-date high on the previous Friday at $3.84, which is 4th of October. The pullback in SATS share price last Friday was healthy, as the low that we see on Friday was at $3.56, above the blue line, which is the 50 days moving average at $3.53. And that means the uptrend of the SATS share price rise is still intact this year. The 50 days moving average at $3.53 now also found confluence with the lower bound of the Bollinger Band, which is the white line that you see here at $3.53, marking this as a good and strong support for SATS share price. Looking at the indicators, the MACD after Friday's pullback sank into a negative reading, indicating at least a pause in the uptrend momentum that we are seeing so far in the past few months. And the MACD may rebound again when it hits the zero baseline, as what we observed somewhere in the August period as well. On the RSI, the latest reading at 47 has breached the 50-point neutral level, so we are likely going to see a bit of weakness in the momentum that we are seeing right now in the SATS share price. So for investors looking at getting into SATS, the 50 days moving average, which is the blue line that you see here at $3.53, will be the first support level for entry, with the next support level coming in at 15 July over here, which is a resistance turn support level at $3.35. For the near-term target price, definitely the first resistance would be the year-to-date high at $3.84, with 12-month analyst target price at $4.04, making the $4 handle a strong resistance level to watch out for or to take some profit off the table. And these are the updates that I have for you this week. I hope you find this information useful, and do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.